Welcome to ShortView Trading. This is your morning market hit for Wednesday, 20th of January. What matters today for traders? Well, the jury is very much out. A whole bunch of assets, particularly speculative liquidity instruments, having peaked on 8th of January, have sort of chopped sideways since then. And of course, highest profile amongst those is probably Bitcoin and or Tesla. Bitcoin topped on 8th of Jan, as you can see in the chart in front of you now, and has basically chopped sideways since that time. The situation is the same with Tesla, peaking on the same day in terms of closing prices, correlating very nicely in recent weeks and months, indeed, with Bitcoin. But it's not just those two highly speculative, high liquidity fueled assets. It's also the S&P500, which, having reached its recent closing high on 8th of Jan, has basically trended sideways ever since. And of course, added to that, we've seen the same sort of price action in bond yields, as you can see from the chart in front of you now, with the yield topping out on the 11th of January and basically giving back a bit of those gains since then. So the jury is out, and markets, of course, have been chopping sideways and pretty choppy over recent trading sessions. Indeed, the S&P 500 soggy into the close on Thursday, weak on Friday last week, and then bouncing back from those low levels over the course of the past two trading sessions on Monday and Tuesday this week. But all the while, whilst that's been happening, our sell-off indicator has been building to its key plus 20 level. Yesterday it reached plus 16. It marches up day by day, and as it marches up, it tells us about growing excessive exuberance in global asset prices. And of course, this is what you get as a precursor to waves of risk aversion. So once the indicator reaches plus 20, we start to get very nervous, and it signals there's a heightened risk of a wave of risk aversion. And in that sense, this model provides fascinating insights to how markets work in the short term on a sort of week by week, month by month basis, and is a very good indicator of when you get that excessive greediness. So in other words, the market's not just greedy, it's continued to be persistently greedy for a period of time. That's when we tend to get these signals, and they often and typically occur just ahead of major pullbacks. So in that sense, the signal's fascinating. It continues to march upwards. It's not there yet, and the jury remains out. So for a full update on how we're playing this, please see today's Daily Rag available to subscribers via the website. So what are we watching today? Well, as always, tons of macro data. Two things in particular have caught my eye. Eurozone inflation out this morning will be watched closely. Of course, there's been tons of deflation in the Eurozone. That's a real issue for the ECB. Whilst over in the States, we've got the NAHB housing market index. And of course, housing's been a key area of strength, so that's important as well. Elsewhere, it's the inauguration of Biden today. The president-elect becomes the official president. Executive orders are likely to follow over coming days and weeks, quickly, as he reverses much of Trump's policies and brings new things to bear. And then on top of that, of course, earnings continue the fourth quarter earnings season out of the States. More banks today, including Morgan Stanley and US Bancorp, amongst others. So that's it from us. That's your morning market hit for Wednesday, 20th of January. Thank you for listening. Please do subscribe on YouTube. Simply search under ShortView Trading, or follow us on LinkedIn, Twitter, and or Facebook. Thank you for listening. Stay safe. Trade well.